The price of crude oil is still strong, well above $100. And back in early March, on the 8th of March, I talked about the relationship between strength in crude oil and recessions. Last time we looked at the last 4 recessions. Let's expand that, looking at the last 5 recessions, starting from early 80s, where we saw a double dip recession, one in 1980, and then a bit of a repetition in 1981 to 1982. Some call it one continuous double dip recession or W recession. If you actually look at the crude oil price just before that, you'll notice that in 1979, crude oil price more than doubled due to the Iranian Revolution. And of course, expensive energy, expensive transportation, increasing costs of running a business are likely to lead to a recession. The next one happened in early 1990s, 1990, 1991. And again, if you look at the timeline, you'll notice that in 1990, crude oil again more than doubled from $16 to $40. The next recession was the dot-com bubble in 2001. And again, if you look at that timeline for crude oil price, you'll notice that just before that, during a couple of years from 1998 to 2000, the crude oil nearly quadrupled, more than tripled from $11 to $37. The next recession after that was the global financial crisis in 2008-2009. And yet again, if you look at the timeline of crude oil prices, you will see it's nearly tripled from $51 to $145. And again, that tripling took place just before that recession, the tripling of crude oil price between 2007 and 2008. The previous recession, due to the pandemic in 2020, is a bit of an exception where we don't observe significant oil price hikes before that recession. But as you do understand, that recession was a bit of a different beast. What's important right now is to focus on the present and perhaps what we can learn from history going into the future. Let's have a look at crude oil price and zoom out on this weekly chart. Over the last year, if you look back to early 2021, crude oil price has already more than doubled from the early 2021 lows of $57 up to the relatively recent highs of $126. If you allow more time frame for this rising oil price, then in the last couple of years, crude oil has gained multiple X's, multiple hundreds of percents from a low of $17 during that pandemic drop all the way up to $146. That gives you a multiple of 8.5 or more. So in percentage terms, that is a significant rally in crude oil price. Transportation costs are rising, inflation is biting into the consumer confidence right now. All of that might again lead to a recession if history is any sort of a lesson to rely on. Again, out of the last 5 recessions, 4 actually took place after crude oil price more than doubled. That's in 80% of the time. So in the longer term, you perhaps want to be somewhat careful with your investments in, let's say, the general stock market. A similar picture arises when you look at the PMI, Purchasing Managers Index. We're looking back at a 20-year history. During the recessions, we see the dot-com bubble in early 2020s, the global financial crisis in late 2010s, and the recent pandemic drop. We see that during the recessions, PMI usually drops all the way down to somewhere around 40. Over the last year, it's been declining from nearly 65 to nearly 55 right now. So if PMI has topped for this ongoing cycle, then perhaps a bit of a continued decline, maybe even all the way down to 40, might spill all the way into a full-blown recession. And of course, as investors, that should influence your decisions in relation to investing into the general stock market. But that possible outlook for recession, for a weakness in the general stock market, is likely to play out over the intermediate to longer term, perhaps over the next year or two. And of course, in the shorter term, there will be counter-trend rallies. There will be rallies within a potential bear market. All of that is, of course, only potential as nobody actually knows the future. So when things get extremely oversold, that's when perhaps there might be shorter-term counter-trend rallies within an ongoing decline into a bit of a possible recession. Looking at this survey by Bank of America of global growth optimism, we see that the market optimism is all the way down at the bottom, even lower than it was during the pandemic drop in March 2020. So what this tells me is that market optimism is at extremely low levels right now. The blood is flowing on the streets. As you know, it's often a good idea to get some exposure when the streets are full of blood. So perhaps a bit of a shorter term bounce is likely. An interesting similar scenario is also suggested by this data from Bloomberg on the number of bear market articles that appear in the print. And we see that usually some sort of a low on the general stock market, on the S&P 500, coincides with peaks in bear market sentiment, with peaks in this number of bearish articles in print. And what do we know? We are now again at some sort of a peak above 8,000 articles. And while in the intermediate to longer term, there might still be a lot of more weakness in the general stock market. After all, this peak is only half the size of the previous peak during the pandemic drop. In the shorter term, I still expect a bit of a relief bounce before the intermediate cycle continues lower. Talking about those intermediate as well as daily cycles, let's look at the general stock market. There's a pretty good chance that the short-term daily cycle finished on the 20th of May, as it's already quite long at 85 days long. Usually these cycles last for around a couple of months, so this one is already pretty long, meaning that at least a short-term bounce is likely into a new daily cycle. Unless, of course, nobody does know the future, unless we have already seen the daily cycle low on the 12th of May and the bounce into the new daily cycle only lasted for 4 days. And with new lows, that would imply this new very young daily cycle has already topped, meaning that for the rest of a couple of months, we're going to see continued downward momentum in the general stock market. But again, I don't think it's a very likely scenario, as this bounce hasn't been much of anything and it didn't last for long either. Additionally, we see a bit of a positive divergence on RSI over here, hence perhaps a bit of a rally into a new short-term daily cycle. I'm not going to expect any significant rallies over here because the intermediate cycle is already nearly 3 months long. So for the rest of its duration, which might be another 2 to 3 to 4 months, it's likely to generally move sideways to down. So a bit of a rally into the new short-term daily cycle, perhaps a bit of a retest of the 50-day moving average. That's what usually happens with these bear market rallies before the daily cycle and the intermediate cycle continue down into the low. That would be the most likely scenario looking at the sentiment data and the likely recession in the intermediate to long term due to expensive energy, as well as continued shutdowns in China. But let me remind you that nobody actually does know the future, and if by some miracle tomorrow the Fed stops tightening and switches back to easing, accompanied with lowering rates and printing billions and billions of dollars, we might actually see a bit of an unusual intermediate cycle low over here and a continuation of a strong rally fueled by the Fed dovishness. But with a relatively high inflation, which again damages the consumer's ability to support the economy, with this high inflation, it's not very likely that Fed will turn around from hawkishness into dovishness at least tomorrow. So make your investment decisions accordingly, but remember that this is not an investment advice. I simply share my views on the markets, and if you have something to share, you are more than welcome to contribute down in the comments below. By the way, over 90% of the information discussed in this video was already presented to the members at myfinancesteacher.org yesterday in this post from 24th of May, but additionally there is a relatively important discussions on longer term cycles, not only in the investing world, but in our global societies in general, this interplay between Western and Eastern values, longer term cycles of inflation, the public experience from that inflation, and consequent market reactions, as well as public view on the size of government. So for timely, regular updates on a range of markets, including the general stock market, energy, crude oil, uranium, other commodities such as grains, precious metals, and cryptocurrencies, feel free to join us at myfinancesteacher.org. It's only $5 for the first month, which is basically nothing, renewed at $10 per month after that. Have a nice day. Bye-bye.